Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:01 in the a.m. Eastern Standard Time, January the 3rd, 2020. Good morning, everyone. A big night overnight. I didn't get much sleep, to be honest with you. So I'm going to be sucking down coffee. I misplaced my glasses, so it's going to be hard for me to read comments, but I will plug through. And what I'm doing right now is I'm going over the headlines. And I'm looking for any new news. So we have Iran vows to retaliate. No shot there. This is what I'm concerned about, is the U.S. Embassy. That seems to be a soft point. And it'll be a humiliation. It'll be taking us back to 1979, a la Jimmy Carter, the Iranian hostage situation at the U.S. Embassy. That would be very, very poetic. Or they may do nothing. I never even heard of this guy before. Good morning, Patrick, Eric. Yeah, it's gonna be it's gonna be a wild day, no doubt about it. That's right, Eric. Who needs sleep? I was literally up 75% of the night. I was just checking in on the phone. It's gonna be crazy. So let's take a look real quick. I just want to go over Zero Hedge. This hasn't changed. I was watching Al Jazeera last night. I think it was on this article here. It was embedded. Yeah, right here. I was watching this until all hours. In fact, let's go to Al Jazeera. Let's see what they're saying over there. They're lit up. We'll take a look at, obviously, gold. We'll take a look at oil. Okay. Not much in terms of difference of what we're seeing elsewhere. Nothing new. Revenge, yada, yada, yada. Okay. Let's take a look at the charts. So gold on a 15-minute basis, the first chart I pulled up, is just an amazingly beautiful chart. Stair-stepping higher. The one thing I'm going to warn about right off the bat, looking at this chart, is this. We have a diverging RSI. So while this is a really pretty chart, it's a beautiful setup, more than likely it's going to be a good day. You know, this is an event, right? And it's one man. I'm going to still say, be cautious here. Be wary of a sell-off. Be wary of a pullback. Because we're going to be heading up into, we'll take a look at resistance levels. We're very close to all-time highs in U.S. dollar terms on gold, and there will be some selling pressure. Four-hour chart looks amazing. Let's take a look at the dollar. Now, here's what it could be a problem. And I was honestly looking at this all night long. And it finally happened. What time did this happen? I thought it was all night long. The 1 p.m. bar opened up because the dollar wasn't doing anything. It was up versus the euro, up versus the Canadian dollar, which I was surprised at, and it was down by a half percentage point versus the Japanese yen. And overnight, it is now broken out. And remember yesterday on the daily chart, the dollar broke out. Now, I always say this, that with geopolitical, you got it, Patrick. I'm definitely going there. When geopolitical events occur, you can have gold and the dollar rally in tandem. So that holds true today. We certainly have a geopolitical event on our hands here, but those correlations do not last. They do not last. So remember, this is one man. We're back above the 97 mark on the dollar. And it appears as though we are going to move higher here on the dollar. Now, I expressed concern yesterday on on Thursday Night Stock Charts Live with regards to yields. And we were up on the week. We pulled back yesterday. We are holding the lows of the week. Let's see what they're doing today. This is the bond price. We just went positive on this 4-hour bar on the dollar. And we have a new period high. Bond prices continue to surge. I don't even want to look at the stock market. I haven't looked at the futures yet. Bond prices appear to be moving higher, and they want to go even higher from here. So, my concern with regard to the 10-year yield is abated at current because in all probability we have a new week-over-week low. Richard, second most powerful man in Iran, Richard. Eric, way down 1%. Eric, you're talking about the stock market futures? I'm assuming. Let's take a look at those. Gotcha. Thanks, Richard. I never heard of the guy, to be honest with you. But that doesn't mean much. Bitcoin popping here. Yep, S&P is down 1%. This is the new 4-hour bar. They haven't pushed to a new low here. And this coincides with support. 32.20 is critical support. We may be looking to add to a short on a break of that support level. Let's go to the Russell. The Russell is down big, 1 1/3. Can hardly see it. It's at support. RSI still has further to fall here. These are some pretty ugly charts. Let's take a look at NUGT in the pre-market. I don't know how much it's traded or bid up. All right, we're looking at around 37, the high this morning. Hey, Cherry. Low TS, buy the dip on the stock market futures. Good morning, Adrian. I'd be careful about buying the dips right now on the S&Ps or the Russell. I'm thinking about adding to potential short. This is going to be a risk-off environment right now. You need to have conversation had, headlines released, intermediaries are meeting, State Department is in talks with the Iranians. Stuff like that has to start getting floated before people start to calm down. Let's take a look at dust. Down big this morning. New lows. We'll probably be stepping in at some point in time, putting an advanced order out, looking to buy some dust as a further hedge on our position. We may get called out of the our covered call position. It's not our entire position, but we may get called out of that today. I look at the VIX, Cherry. I don't trade the VIX, or especially ETFs like TVIX. I just don't like them. But I do watch the VIX. It got killed yesterday. It's going to explode today. Do you like SPXU for shorting? What is that, an inverse ETF? Probably leveraged. Yeah, that's fine. Just like SPXL, XPSS. You know, it's the same thing. The only thing I look at differently on each one of these is the volume. I like liquidity. So the XPSS it traded yesterday 6.9 million shares versus the XPSL 3.7. Still, oh, that's the wrong one. Sorry, SPXU. Versus 7.5, 6 of one, half dozen of the other. I think they're both fine for your purposes. Yeah, I like them. Okay, let's talk about gold resistance. 43. I think that on the I think our number to watch on the GLD anyway is at around 149.28. And that puts us on the threshold of flirting with a rally up to new all-time highs. The high of the session so far is at 146, so we still have some upside here, even from where we're trading at current. We probably won't get there today, but probably in the next several days. $15.49. Let's go to gold. $15.49 is the current. Let's bring up some pivot points here. Okay. Wrong chart. Sorry, guys. I can't find my glasses this morning, so I'm suffering a little bit. We're going to be trading right into really stiff resistance. The 1598 level is going to be serious resistance for gold. Let's bring up the pivot points. It's a daily chart. Pivot points again. $15.66 is the recent high. We're going there. So that's resistance level number one, 1566. And then after that, around 1600. And that's going to be psychological resistance level. So it's looking good. Lil Born, hey, how you doing, pal? Happy New Year to you too. You're very welcome. Thank you for being here. Would you cover your calls or just let them get taken? I would just let them get taken. Don't forget, Patrick, we sold puts yesterday. You know, if I wanted to, I could just sell puts into next week and sell it at that strike price that we get called out of the 37s. Hare Krishna. Okay. How many other comments do I have? All right, good. Let's, what else do we want to take a look at? Let's take a look at, well, dust. There's no historical support below. There's really not much to talk about. Not much to talk about here. Let's see if any other news items came up. Erdogan is trying to force more refugees into Europe. Europeans are going to love that. All right, not much happening here. But this decade has really begun off with a bang, for sure. Let's check back in with gold. And we didn't check out silver and oil. We'll go to those as well. Just keep an eye on this bearish reversal on RSI 15-minute basis. Let's go over to oil. Ripping. You know what else is going to fly today are the tips. All these commodities ripping through the ceiling, the tips are going to fly. They're already breaking out in the pre-market. Let's go to natural gas. Everything has to have a bid to it today. My pleasure, Patrick. Yeah, it's nice. I'd like to get more people, but it's slowly but surely building up a bit. So I like that. And especially this morning, it's kind of like a special event. This is like a special episode of Swing Trading Today, our emergency episode. It's Richard. Today being Friday, do you think that people will run for the exits at the end of the day? No one wants to go long over the weekend. Given the fact that we've come so far so fast with gold in particular, and the fact that you have the dollar, which is moving up higher, and we're nearing resistance levels, I'm not going to be the least bit surprised to see some profit taking here. And with that comes opportunity. I'd be a buyer of the dips. I'm very, very bullish. We've been very, very bullish on gold, but you're going to get pullbacks. Right now, you take a look at, we'll come back to nat gas for a second. You take a look at this chart. I've been here so many times before. You take a look at this chart and you say, my God, it's never going to pull back. It's going to the moon. Trust me, it's going to pull back. It's just a matter of time. And we're very overbought here. So that's why I'm not going to get all too crazy about getting called out of our covered call position. If that does happen with the NUGT 37 strikes today, we still made money. We made a lot of money. So we'll get a pullback. And on that pullback, ideally, we'll have the shares put to us if we decide to write puts, and meaning sell premium, bring in income, and try to get the shares discounted. And we did that with options that are going to expire worthless today. Options on act of God. I mean, we sold, what was it, the 33 strike price yesterday afternoon. Those are going to expire worthless. So it's all good. Just keep generating cash flow. I was asking about SPY. Oh, I see, Richard. Okay. I see. Do you think that people... people may not want to. I don't think institutions are going to want to go. I think it depends on what technical support levels we hit. You may have some technicians stepping in. You do have, let's not forget, we have the Federal Reserve that is still accommodative. If they weren't accommodative yesterday, they are going to be today, right? Because all this geopolitical risk is only going to do one thing, and it's going to make them more dovish. So longer term, is that healthy for stocks? In all probability, yes. Are they overbought? Yes. Are they expensive? Yes. But we went over some charts yesterday that showed where we're at in historic terms in terms of valuation. Very overbought. Every reason to go down. But you have the Federal Reserve at the back of the market. So I'm not going to be the least bit surprised to see a floor get put in here. and buyers come stepping back in. Maybe today, maybe next week. I'm going to go to Nat Gas too, Patrick. Thanks for reminding me. If Iran retaliates, there will be major war, then gold will skyrocket. Bob, that's yeah. Technical analysis for gold is irrelevant when geopolitical risk drivers gold as a safe haven. That's not necessarily true. I mean, you had geopolitical risk back in the Brexit days, and uh, if you didn't know when to get out, I mean, Brexit was going to happen back then, right? You had the vote on Brexit, you had the dollar rallying, you had gold rallying, and if you didn't use the charts, you didn't know when to get out. So maybe not on the buy. Technical analysis may not help all that much because you have so much fear driving the market up higher. But when it's time to get out, technical analysis certainly does help. So I would take a little bit of issue with the comment, but thanks for commenting. Brexit is not the same as war. It's a geopolitical event. So unless they shut down the Straits of Hormuz, I'm not seeing all that much in terms of concerns here. I just don't see it. If we have attacks on U.S. soil, major concern. If we have the Straits of Hormuz shut down, that's a major concern. Absent that, I'm not all that concerned. An attack on Saudi oil infrastructure, that's a major concern. You start talking about that, then yes, I would agree with you. But you're still going to need your charts to identify when the markets are priced in the war factor, the war premium, and when it's time to get out. Because eventually the sell-off, the fear is going to come off the table, and you're going to need to know when to get out of that position. And that's where charts come in. Emotions are going to drive the market. The charts are going to tell you when it's time to pull the plug and exit. Okay, but thanks, Bob. Thanks for the comments. Are gold ETFs safe if gold skyrockets compared to physical? That depends upon I think who's president. That depends upon a lot of things. If you get bail-ins and things like that here in the States, like they did over in, I believe it was Cyprus, or capital controls like they did over in Greece, nothing that's electronic is safe. So is physical better? Yeah, I guess so, because it's tangible. You can feel it. Longer term, it's a store of value. The electronic version, I can be confiscated. Who knows? Maybe. When gold was at 1480 last month, no charters predicted that gold would touch 1550 in a few weeks. I think that's fair enough. I certainly didn't think that. But we've been bullish. We've been bullish for quite a while now. So the fact that we're breaking out here, that was occurring prior to the Iranian situation. So the breakout is not a result of Iran. The breakout is a result of inflation. That's truly demand. You have central banks which have been buying up gold. Germany has been buying up gold. Iran has been buying up gold. The Chinese and Russians have been buying gold for years. So this is really nothing new. Is this a bit of rocket fuel? Fuel that's been added to the fire for gold? No doubt about it. I can't argue that point. Have we come far very fast? No doubt about it. I can't argue your point, Bob. You're welcome, Richard. And again, Bob, thanks for the comments. Appreciate it. Okay, Nat Gas. I'm sorry I'm rubbing my eyes, folks. I can't find my reading glasses, and it's driving me crazy. My computer glasses, I should say. Nat Gas. Where is it? Here we go, right on top of it. Wow, nothing happening here. I think we pop. I think we're going to pop. RSI very oversold. I think that you're probably going to have, with commodities on a tear right now, and people missing the train on commodities, they're going to look to see what hasn't rallied. And the technicals on nat gas are pretty poor. But you're going to have people out there looking at oversold conditions, and they're going to step in and they're going to buy nat gas. I think we're probably going to get a bid fairly soon. I'm not ready to do it yet, but I think that we will get a bid. Look at this. We're getting clubbed over the head right now as we speak. Selling off on a 1 hour basis, trading down below the third standard deviation Bollinger Band. Very oversold on RSI, going lower. I think we're going to catch a bid some point in time today. Bob, that's what I'm saying, that gold is not a usual commodity. It cannot be charted reliably like iron ore. No, it can be traded reliably. I agree with you to the extent that it's not a general commodity due to the fact that it really has no use, with the exception of some manufacturing, jewelry. But in the end, all the gold that's ever been mined is still in existence. Therefore, it's a store of value. It's money. It's really the only money, along with silver, that there is. So I can chart the US dollar. Is it volatile? Yes. I can chart the euro. Is it volatile? Yes. Gold can be charted. We've proven that. I've done hundreds of videos on the price of gold, the miners, silver. So it can definitely be charted and forecasted. Can you extrapolate out how far gold will rally due to a geopolitical event? That's a bit more difficult. I wouldn't hazard to make that guess that I could do that. I'm not that good. I think I'm good. I'm not that good. So I do know where there are. Let's go to the monthly charts of gold for a moment. Let's go back there. And what we'll do is everything comes back to probabilities, right? So what are the probabilities of gold staying? Keep in mind here, and this speaks to the technicals. And I also want you to remember, the dollar is surging right now. What is gold priced in? US dollars. Now, I would say to you, were the dollar not rallying right now and you had gold surging, gold would have a lot more upside potential. But right now, with the dollar rallying, I could tell you using technical analysis and the pairs trade that the limits of which gold can rally at this point in time due to the dollar acting as a headwind is it's a bit more limited. So we know that if we're deciding to short gold or put on a hedge, and I wouldn't short gold right now, but when you take a look at RSI at 85.58 on a 1 hour chart, that at some point in time, it's fair to say that this rally is unsustainable. Now, when you take a look at this chart and you're saying, okay, my RSI is overbought. Is that enough to go shorting gold right now? No, it is not. I want to know where, on a macro basis, on a historical basis, where do I have sellers of like mind? And we showed them earlier. We'll bring up the pivot points. $15.66 we know is going to be a resistance level. You have people that bought back there. They don't care about Iran. Most people, you people that are on here are nuts like me. If you're on the Eastern time zone or even on the West Coast, you're even crazier. You're crazier than me, the West Coast people, because you're in tune with what's going on. But you have people out there that have been holding on to gold. They bought at 1566.20 back in August. All they want is their money back. That psychological resistance level comes into play. It's going to act as a bit of resistance. If we get through that, you're going to have a lot more overhead supply up here. Where, what's the low here? 1535 is the low. We're going to be above that this morning. Well above that. Then we go up to 1596. You're going to have overhead supply. If those people weren't there, if they did not exist, if we were trading up and above 1923.70, new all-time highs on gold, I would say that gold has a lot higher to go. Why? There's no overhead supply. So not everybody out there is in tune with what's going on geopolitically as everyone on this live stream is. This is an intelligent group of people. So I appreciate the intelligent banter back and forth. I really value it because I'm not always right. That's for darn sure. And I like to hear other people's opinions. And I do agree with you that gold is not like any other commodity. Gold is the only true money. And that's my opinion. Apple weekly RSI. Apple is insane. If we, in all probability, Apple's going to gap down this morning. But I'll be looking for a counter trend rally on Apple at some point in time. You can tell I don't have my glasses on. Here's the weekly that you referenced. You know, if this Iranian issue didn't happen, I would be very, very confident with saying that Apple would probably still be going higher. And folks, I haven't said this yet. Good morning, A. Happy New Year to those that are new. Can I ask you to hit that like button, please? It helps me out with the YouTube algorithms. Thank you very much. If this Iranian issue did not happen today, I would think that Apple would have continued higher. And I was hoping that it would. I was hoping that we would see RSI 90 on it, something insane. And we may still get that on a weekly RSI because we may get some of the froth that gets taken off of the daily RSI. But if we recover next week, because this type of an event, people forget quickly. If the Iranians don't do something or they don't ratchet up the rhetoric quickly, people are going to forget. And people will go floating back into stocks because you're going to have the fancy pants, well-dressed thugs on Wall Street going back on CNBC saying, wow, buy the dip. Stocks are cheap. This is the bargain of the decade. Get in now. You've been given a gift. And people are going to forget, and they're going to go back to listening to the same old drivel, and they'll drive stocks back up again. And keep in mind also that we're nearing silly season. What's silly season? Earnings. Earnings season. And they're going to hype up the markets. And another thing, keep in mind that the president tweeted the American flag last night. I salute him, okay? I'm a patriot too. But one thing that he does not want in advance of a presidential election is a stock market crash. So he killed one guy for a reason, or two guys, to be fair. He killed two guys for a reason. He didn't want all-out war with Iran. That message has been sent clear. The Iranians understand that. It's their call now if they want to create an all-out war. I doubt they do. They may. Who knows? I'm not that smart. But I think that this is going to be tit for tat and less of the closing of the Straits of Hormuz or the sinking of a tanker, perhaps an attack on a Saudi installation, perhaps an attack on Israel. Who knows how it's going to play out? In all probability, it's going to be through Hezbollah, their guerrilla arm in these countries, laying out attacks, less the military of Iran, more so guerrilla tactics. And if they go that route, I think the fear trade is going to come off pretty rapidly in the commodity sector. So that's my thought. And you probably see a bid under stocks. Then if we get that bid under stocks, especially Apple and these overbought stocks, I'm going to be looking for a lower high on an intraday basis. And if we start to see weakening and a stalling at putting in a new all-time high, what I always like to say when that occurs is the test is always at the top. Meaning, we put it in an all-time high, we pulled back, we rallied back. The question is, do we break out or do we roll over and take out the prior low? If that happens, in all probability, you're going to see a correction on Apple, and we'll be looking to take advantage of it. Races on the West Coast. So it's, wow, you're crazier than me, Richard. God bless you. And you were up on Thursday Night Stock Charts Live last night, too. And the members in the circle. God bless you. Love having you. A diehard like me. And Patrick, too. And Eric. RL's not on this morning. He said have a good weekend. I don't think he's going to check in today. Adrian, maybe the sell-off goes to the 20-day moving average. Quite possibly. Let's bring up the let's bring up SPY. So here in dotted green is the 20-period moving average. And it's a reasonable rising support level to watch hold. So yeah, Adrian, that may hold. Hey, Sam, good morning. Now, Sam's cheating. Sam's actually 5 hours ahead. He's over in Italy. So, Sam, we were talking earlier about the diehards getting up Eastern Standard Time and in Richard's case, West Coast time, getting up this early to study the charts and talk about geopolitical politics. So we're a crazy bunch. Hey, Frank, how are you, sir? Okay, how many ways can you say the same thing? Oh, that hurts. A lot. I could talk a lot. Thank you for that. It's all good, Sam. Silas. We addressed that, the physical versus the electronic. Okay. Let's check back in with gold. Continues to get bid up here. I mean, what a strong chart. Just watch this RSI on a 15-minute basis, though. Let's check out the dollar. Dollar, new intra-period high. Now, the yen was stronger against the dollar earlier, and it remains stronger. Remember, we were talking about we're probably going to get a pullback here on the yen. We were talking about the Japanese stock market and currency a few weeks ago, and it certainly has panned out that the Japanese markets are moving up higher, along with the Japanese currency. Lilborn, spot sells bullion, ETFs. Yeah, when I talk about physical gold, I talk about physical gold that is in possession. Sam, by the way, please read that COT data and let me know. Will do, Sam. When I can find my reading glasses, I will. Bob, Iran might want war. There are big political and economical issues in the country. Yeah, they have the sanctions, yes. They will need war to keep the people preoccupied. They have done this before, possibly, but they have to know that if they do that, it's going to be probably the end of their regime. CNBC headline saying dollar at 9-week low. Maybe this week, this week it hit a multi-week low, but we're certainly off those lows now. Yeah. Late news. All right, folks. With that, I am going to say everybody have a profitable trading day. Members will certainly get together over the weekend and will be in contact with how we're going to trade. Probably put on a hedge here on gold. It's come a long way quickly. There will be resistance above, and we will look to hedge that using dust, and we'll see whether or not we get called out of our position, our covered call position on NUGT. So, interesting day. Thanks everybody for being here. Great group this morning. Thanks for all the likes. If you haven't liked already, if I could ask you to hit that like button, I'd appreciate it very much. Everybody have a profitable trading day. Sam, be well, and talk to you soon. Hare Krishna.